Now, crude oil has lost almost a tenth of its value so far this month. Although the outlook for the global economy and especially the U.S. economy has improved, oil prices have not seemed to benefit. Let's get some perspective now on the recent slide in crude from Simon Wardell. He is Energy Research Manager at Global Insight in London. Good morning, sir. Thank you for joining us. Oil's drop is rooted in the fact that the U.S. dollar has strengthened. The U.S. dollar up about 2.3% if you look at the DXY. Why is the drop in oil outpacing the dollar's gain by so much?
Well, I think because the fundamentals have always been pretty poor for oil. I mean, most of the year we've been trying to understand why oil has continued to go higher and higher. Demand really hasn't been there. We've had a little bit from Asia. In the U.S. and the developed economies, it's been very weak, and we've actually got a huge amount of supply. We have a lot of oil tankers which are storing oil and waiting to sell it forward. So the fundamentals have always been weak. So I think once the dollar kind of came out and turned around, that really reduced the momentum, and that's why we've seen oil falling, I think, a lot quicker than the dollar has increased in value.
So that immediate catalyst, it was gone, basically.
Absolutely, absolutely.
Okay, now, since the 2009 high in October, oil prices have fallen about 15%. How much more downside do you see for crude?
There might be a fair bit. I mean, I think we might be entering a period where we steady a little bit. I mean, so much depends on what happens with the dollar. But when we look ahead to next year, we see demand growth coming back into the market, but not at a level that's really going to outpace supply growth. So when we get into the end of the first quarter, beginning of the second quarter, we might see another substantial increase in global oil inventories, unless OPEC has managed to get a grip on supply. So it looks at the moment like the end of the first quarter, beginning of the second quarter might be another leg lower, and we could see prices in the low 60s, perhaps even for a time a little bit lower than that.
What about stockpiles during these winter months, especially with the U.S. Northeast ready to face its coldest winter in at least a decade?
Well, we're going to need Arctic conditions to make a real dent in the distillate stocks. We've got distillate stocks so high at the moment that it's going to take a real draw to get anywhere approaching normal levels for the time of year. Refiners have been cutting back on distillate production, but we've got such a big overhang that it's going to take a while to work through that inventory. So depending on how severe the winter is, we might be coming out with extremely high inventories or something approaching normal, and that could have a big impact on where we go over the spring and summer months.
Let's get back to the correlation between the dollar and oil. The market is now starting to price in a rate hike sometime next year. What does that mean for crude?
Well, I mean, it's putting a lot of downward pressure on crude, and we might actually be moving back at some point to the fundamentals once again. Oil's been moving largely with equities and the dollar for most of this year, not really with the fundamentals. We've seen all sorts of strange correlations going on this year, but I think with equities and dollar link, as was mentioned earlier, beginning to break down, and the oil equities link beginning to break down, we might start to see the fundamentals of oil coming back into play as a real market driver. But obviously what the dollar strength is doing is it's putting a lot of downward pressure on oil. A lot of people are stepping back a little bit because they're maybe a little less convinced that the oil price is going to go only one way and up.
Okay. Thank you so much for your thoughts. We've been speaking with Simon Wardell, Energy Research Manager at Global Insight in London.